Good afternoon, everyone. This is Henry Gambell getting started with the State of the Market address here on Facebook Live. About 4 p.m. Central Time. I'm going to give this just a few minutes to make sure we've got a good feed, make sure I can get a good audio check along with video. Excellent. Thank you so much, Robert. That will be hopefully good enough for at least the rest of today's session, so thank you for the confirmation on that. I apologize for the false start that I had earlier today. I thought I was just testing in the testing only mode, but apparently I was live. This is the broadcast that we had intended to get going at that moment. So I'm going to try to approach this from the point of view of making it helpful if you're only catching the recording, which is to say that I'm going to stick with a few themes. I'm going to cover a few ideas. If there are questions that are live after that, I'll be happy to look at that. But then, like I said, hopefully it'll serve you well. Regardless what time you are viewing this content. So, of course, today is Monday the 21st, and when we got into today's trading, there was a fair bit of volatility. I think it's interesting to note a lot of traders, maybe, depending on how you're trying to look at all of this, but often look to the idea that weakness in stocks should be something that sends the gold market higher, right? The idea that gold is a bit of a flight to safety type product, and looking to it for, that safe haven. Well, it couldn't have been further from the truth today as gold fell. The closing price here is down 44 points on the session. And I begin with this chart because I think it helps all of us bring into focus what is the most important chart on the planet right now. And I believe that is the daily chart of the dollar. So the weakness in gold is not so much a reflection of it not working as a safe haven product against equities, but is more showing the strength in the dollar. So you can see that looking here at the cash index, we were up just shy of 1% today. And this is what I think everyone needs to be carrying forward, because if we... Excellent, thank you. Looks like we're still good to go. But if this signal can trigger to the long side, this is going to be one of the primary things that puts pressure on stocks. So, we saw that reflected today, a decent little pop higher, and this is the signal that we stay focused on. If you are new to Thinkorswim, the basic version of this squeeze indicator is in the platform. So you can pull this up, look at it on your subgraph, and I think it'll really help you with your directional trades. I am thinking, or at least trying to work with the idea, that the dollar could head higher into the end of September, and then from there we look for a resumption of the trend. So with today being the 21st, that implies that we could have another, about a week or so looking for a meaningful bottom in equity prices on Wednesday of next week. So we'll see how that can come through. Inside of that, look for the inverse to happen in the euro, and you can see kind of the same thing here. And what makes this difficult is that the trend that led us here was incredibly bullish. And now we've really just started to trade sideways. So if that's more of what continues to happen, we may see more of what we continue to get in stock prices. But if this euro breaks lower in a big meaningful way, then that's going to imply the rising of the dollar, and then that'll have a big impact on stocks. So keep that in your watch list as you are working through the next week's trades. And then once we've got all of that laid out, we can come back over and look at the watch list that we're going to be going through for the next couple of days. My personal favorite is Tesla. And there's a lot of things that we can reflect on here off of the technical chart, and my favorite is almost always going to be the daily squeeze. Now, this is the lower compression variety, which is just the relationship of the Bollinger Bands and Keltner channels and how they are kind of ebbing and flowing to create the compression that will usually give you a directional move. So within that way of thinking, we can come back and look at these previous signals. If you are new to this, I always like showing previous instances to show, all right, there's your signal, and there was a nice move higher. Then you can see we get into another phase of compression, and when that signal makes its transition, look at the directional move that followed in Tesla. If you can see these past instances, well, then you can see the signal that is forming right now. Now, heading into tomorrow, you've got battery day, right, that's on the horizon, and that's going to be coming up after the cash markets close. And really what you're going to be looking for is some type of play on long volatility, and I think also being long directionally. So I like the idea of pursuing this through the long straddle or through directional calls. Those are the two positions that I have on heading into tomorrow, and it's a good reflection of support at the 21 EMA, and also coming back to continue to work this psychological area of 420. John had made the off-the-cuff comment last week. He said, if Tesla gets back down to 420, that's where you buy it and hold it from now on. Now that is not direct advice, but I have found that by listening and kind of taking those off-the-cuff comments to heart, I can usually make some good trading opportunities out of them. So I think that's going to be a very important candle. We will see what tomorrow brings, but my intention is to run the long calls and the long straddles into about 15 minutes before the cash market closes. Then I will flatten all of that out and begin looking at new butterflies for the actual report. A couple others that I think you want to look at, and we've been in for a couple of days now, but I don't think the move is over, and one of them is here in Peloton. Peloton is interesting to me because even inside all of the technical analysis that we do and the various indicators, etc., this is one where it's kind of fun to come in and just hide your studies. And the only thing that we are looking at is pure, clean price action. And if we look at this from kind of a beginning point of view, like let's start this chart over and try to see what I'm trying to show you in this. That is to say that when I look at this chart, the only thing that I can see in it is a correction right here that lasted 3 days. Do you see how this was day 1, 2, and then that third candlestick is where you put in the low? All right, that correction was a certain amount of time, and it was a certain amount, dollar value. Then we compare it and say, well, here is a high, that's 1. Here was the big down day on the actual very stellar earnings report, right, where the market makers really did an excellent job of just crushing the volatility and hurting everyone that was trying to play that for a big directional move, right, because a big part of it was already priced in. And then here's that third day. So you just see an instance where you've got symmetry in time, symmetry in price, and now you ask yourself, can that pattern be repeated in the opposing direction? So if you can start to see this pattern in your mind's eye, well, then you can put the level on it, and we'll say swing high to swing low. And then do you see how that swing high to swing low was about the exact same thing? Okay, if you can start to see that repetition of pattern, how does that help us moving forward? Well, I like working with the idea that if this correction was similar to the correction that you saw previously, maybe this advance, the one that we're going through right now, will share similarities with this advance, right? So now we're talking about a swing low into a swing high, and working with the idea that then from this low will project us up into this high. And it just helps create this self-fulfilling prophecy, or this pattern of higher highs and higher lows, and that's one of the basic foundations of a good bullish trend. So you can see that by then taking that exact same tool, we're going to go swing low to swing high, projected from the low, and I think that gives us a very viable target at 105.33. So, depending on how far you are along in your trading, you may enjoy that just from a stock perspective. But if you want to get into the options trading, this is where things start to get kind of interesting, because you can structure a butterfly, you can look at a vertical, and I'm going to share both of those with you here, and we're going to look at them for trades this week. So as with all of this is just ideas, hopefully something to kind of, get your plan churning and give you something that is worthwhile to consider. But thinking that we're going to move up into 105 by the end of the week, I'm going to look at my options chain first and say, is that too far-fetched, or is that actually an idea that could come through? Well, the market makers, the people that are pricing out these options, they are thinking that we could be moving at least $7. So my estimation of moving $10 may be a little bit stretched, but I don't think it's too far off. All right, with the continued focus on this week's options, we're going to go into this chain, and I'm going to focus on trying to do something that involves the short 105 calls, right? That's where I think we're going to be finding that major area of resistance, and that's where I will structure my butterflies. So we can click on buy a butterfly. I usually encourage traders to do them a little bit wider and then trade with smaller size if they have to, as opposed to doing a very narrow butterfly and then loading up on the number of contracts. So when we think about the 100, 105, 110, if this is going for 50 cents tomorrow, I think it'll be worth considering. There are a lot of ways you can adjust this, but just think of it from this point of view, that if you take that trade, the very worst that can happen to your position is a loss of $50. And I think most would agree that that's very manageable for an options trade. If we can start getting above 100 and we can move up into that projection we've been discussing, you could make upwards of $400 on the trade. So with a $5 wide butterfly, we're going to subtract the debit paid, and that's going to give us the maximum profit potential. So that is one trade that I'll be looking at. I also think that you could come in and do the vertical, that is the same idea, and you could sell a put credit spread to complement these. I'm going to be focused on the 4-day expiration this Friday tomorrow, but you could put those ideas to work in just the same way in the October that have 11 days until expiration, and look for that trend to continue to follow through. So that is one of my favorite picks right now and will continue to be a favorite pick as long as it can stay above that previous swing low of 78.83. So there is Peloton. Let's do a couple more that have a very similar tone to them. You've got Zoom, which is a little bit, I think, too much in the public eye right now. Now, it's a fine line because their last earnings were obviously some very stellar numbers. So the idea that you could see continuation off of that is very much a reality. I don't like coming in here and saying, I'm going to buy the stock or I'm going to buy directional call options, because you get any type of a meaningful retracement, and that could be a very drastic drawdown, right? I mean, support, I don't see anything that stands out immediately, but if we were to look at our moving averages, just referencing that 21 EMA, that comes into play all the way back at 376, and nobody wants to hold directional options through that. So instead of thinking directionally, start thinking about those butterflies or verticals and structuring them in a very similar way. So inside this pattern, if we can all agree that this is your major swing high and that this would be your major swing low, well, then you've got these extensions that come in overhead, and I would be treating those exactly the same way, which is to say you could put the body maybe around 515 or so, or maybe even a little bit higher. If you're going to be shooting for these bigger, broader targets, give yourself more of a duration in time, which is to say, that's not going to be something I'm trying to do for this Friday, but could it get up there by the monthly expiration? I think it could make very quick work of that. So there's two things you got to think about. Like, let's just say we're going to do this a couple of ways. I like the extensions, but for the sake of discussion and also to hopefully give you a helpful strategy, because I've seen this so much in this market where traders will put on something like, let's call it the $500 butterfly, and they'll do it balanced. Say something like 480, 500, 520, your $20 wide call side fly. And then Zoom is going to rip right through it. And they think, well, I had a good probability strategy, but now that I'm through my short calls, it's just a difficult situation to manage. The two best ways to mitigate that risk are going to be either to break a wing, which is to say instead of buying the 480, you're coming down and you're buying something like the 470 or maybe even the 465. And then as that product goes higher, these options will be deeper in the money and will help compensate for the short body that you have gone through. So, the quickest modification is to break that wing. The other way, if you're more comfortable with just the standard butterflies, is to add the put credit spread. So let's look at what that would look like in the options chain. I like the idea of going out into the monthly series here in an effort to try to get a little bit better volume. Zoom traded 16 million shares in the underlying today, and the options are decent. I'm scrolling out here looking at this $500 body. You can see that a month out from now, there's still a huge amount of premium in these. And this is where you're thinking, all right, 500, that makes decent sense for the psychological value. But if the expected move this far out is $80, that's where you could really just rip right through that short body. So this is where I like the idea, and I'm going to bring it to you both ways. If you don't feel like you're quite comfortable enough to step into the broken wing, let's do this as the standard butterfly. We'll do the 470, 530, and that's going for about a $3.50 debit. All right, that's one trade that I'm going to right-click on and then send this over into the Analyze tab. See how this has risk in both directions, where if it rolls over, I could lose money that way, and if it really starts ripping up above 530, well then I'll lose money that way. So you kind of have to land it right in the middle. I think that's still a good way of thinking because you've got that big round number of 500, but then the addition would just be the sale of the at the money put credit spread. So something like selling the 470, and then let's look at buying the 450. So this is going to be a $20 wide put credit spread. And then if we right click on this and send it over into the Analyze tab, do you see how the two of them kind of create the same idea as the broken wing? Let's always be sure to point out that the addition of the put credit spread does increase the potential of downside risk, right? If the entire trade idea doesn't work and Zoom rolls over, you have to be comfortable with whatever this number is. But I show you this to say if it pins at 500 and it moves right up into that big round number, that's where you will achieve your maximum profit. But if you wake up one day and Zoom is up another $60, we're still making money. Notice that this is your zero line. So as it comes across, anything above that is where we're making money. Do you see how you catch this elbow right here? And it just continues to flatline out? That means that no matter how high the underlying goes, this combination of spreads will yield a profit anywhere higher. So that is a place where I really like the addition of either the butterfly, the broken wing, or the addition of the put credit spread to play Zoom into higher prices. If you understand that discussion, you're going to have no problem stepping over into Roku. Now, Roku had a huge day today, up on stellar volume, and kind of a similar situation to what we looked at briefly there in Tesla with the low compression squeeze, right? We've got this signal that continues to be one of the most important foundational aspects of what I do with directional trading. When we look at today's move and say, gosh, it's up 17%, it can be, I think it's tough to step out and say, I'm going to buy it directionally, but can we have that same discussion of looking at butterflies, verticals, and things like that to kind of lessen the risk? I think there's absolutely a chance of that. So as we move into the end of the week, I think that you're going to try to get up in there into about 198.53. That's an important voodoo line that should give you an area of resistance. You have the large psychological value, and then if we measure extensions of those moves, you also have some of that lands you at 199.95. So a lot of different reasons to think that maybe Roku could get up in there into those prices. For this discussion, I'm going to go back to these 4-day options, which, you're either going to be really right or you don't have a lot of time to work around it, so keep that in the back of your mind. But I see the same thing here, where you've got a large amount of action that has taken place here against the 200s, and of course for every buyer, a seller, and it's just kind of the idea, do we pause at 200 or do we keep ripping through it? And that can, I don't know the answer to that question, but I know how to structure a spread where I can navigate pretty much anything that I need to. So what I'm going to be looking at here is something like the 190, 200, 210, and then I'm going to take that spread that's going for about $1.50 debit. I'm going to throw it over into my Analyze tab, and then I'm going to show you the same thing with the addition of a put credit spread. Because we can see that if we just have the standard butterfly, if we can land it up there, well then that could give you a very nice risk reward. But if you're in that mode where you're at lifetime highs and it just continues to keep pushing higher, we want to do something that will take off the risk below here. Do you see how right there is where we cross below our zero line and we begin losing money on the upside? So do the same thing. Either break a wing, so let's take the 190 and move it down to the purchase of the 185. And that is one very quick way of doing it. You can see now where we get this elbow and it's, goes out and kind of flat lines to the right, that value is above zero. So no matter how high it goes, that butterfly will make you money. Now, if you wanted to keep the debit of the butterfly a little bit smaller, you could still entertain the $10 wide and then just add the put credit spread to it. So same idea, working the at the money or just a tiny touch in the money. If I have a very directional opinion of an underlying, I don't mind selling. Like in this case, let's say you sell the 190 put. Most of the time, you're trying to keep your short options out of the money. But if we look at this case where you're only $1.20 in the money, I think it still makes good sense to sell that vertical. So if we're looking at the sale of the 190, and we could do it, let's say the 190, 180, you'll see that that brings in $4.54 of credit. So I like to think of this in, kind of these terms. Or if you're just doing it one-on-one like this, well, then that's a great way to have it where you have no risk to the upside. But you can also structure it a little bit differently because you're taking in such a good credit on the short puts and say, maybe I end up doing 2 of my butterflies. Then it's going to pay you a lot better if you do hit your pin. You still have no risk to the upside, and this large credit helps you buy a couple of these. It's actually a very unique example to show you this because you can scale this idea all the way up to a 3x1, which is to say you are buying 3 butterflies with the credit that you took in from 1 put credit spread. See how that credit brings in $4.50? Well, how many $1.50s will that buy? It'll buy exactly 3 of them. So let's adjust this one more time into 3x6x3. Now this, if it does explode and goes, like let's say it goes to 250, you're going to perfectly break even. So you're not making anything, but you're not losing anything either, and that's right where I'll stop applying this. Like I won't go to then having 4 of these. I just want to make sure that the credit taken in covers the debit on the other end. I can do that exactly 3 times with this strategy, and that should be beneficial if Roku can continue to move higher. So a little bit of a breakout play, but also trying to get you to think a little bit outside of just buy the calls or buy the stock, because if that pulls back, it can be awfully sharp. By working these spread strategies, you can really tailor your risk to whatever you're comfortable with, and I think that's one of the most beneficial things about options. So those were a couple of my favorite flies that I've got going on right now. I've got a few others I was going to bring to you just as far as basic standard swing setups. Right here we've got Fastly, FSLY, and this is another product in a daily squeeze. Every trade that I bring to you and everything, be it in the chat room or whatever I'm doing, I always need to have this as my foundation. If I'm going to directionally trade options, I can't tell you how helpful this has been in the pursuit of that. A lot of times, directionally trading options is quoted as being a very difficult and sometimes pointless task because of just the nature of the markets. But if you'll spend the time to learn this, look at this, another example where you have this compression, a lot of sideways trade, and then when the squeeze fires, look at that explosive move that you saw from 84 all the way up into 118. So with that in mind, and knowing that that is the type of movement that these signals can provide, I think it's a fascinating confluence to look at. This is the active signal. This is the recent swing high to swing low that I would be measuring my extensions off of. And look at how when you measure that movement and then you project it up into its extension, notice how it makes a perfect gap fill. I like this because not everyone is going to study Fibonacci, so not everyone is going to be aware of that 1272 target. But there are a lot of traders that are going to be looking at this gap fill. So if I move these price and the name, I'll go ahead and correct that to be the gap fill. You can see that that rests at 107.57, and then the extension that I mapped out was 107.39. So this doesn't necessarily make a prediction on movement in time. It can take, we'll get into that in just a second, but it's just to say that from a price-only standpoint, as long as we do not get below 75, we should work our way up into 107. Now, if you want to look at timing, and there's a lot of ways of doing this, but one of the most basic that I enjoy is to look at your last advance and see how many days this took, right? We're going to call this day 1 because that's where you made the low. And then this will be however many days that is. I won't sit here and count it out, But what you can do is once you can start to see that pattern in your mind's eye, then you're going to apply the tool. And you're going to say, all right, I see what I'm looking for. How about you measure that for me? That actually goes out into the 23rd, a little quicker than I thought. Like I said, we'll kind of just, you work with these as you go. That strikes me as a little bit too fast, but maybe takes about the next 10 days or so. And I think you approach this just like those other charts. Either put an upside butterfly up here or just sell a put credit spread. If you're really aggressive and you do understand the nature of it, FSLY may also be good for a directional call. Couple more here on the list. I've got MCD. The MCD chart I bring to you and during this broadcast just because we do go through a rotation here at Simpler. So I may not get to do the state of the market address for a couple of weeks, and I really want you to have this on your notepad, because if I don't get to talk to you again before we get into November, really start thinking about the seasonality that some of these products have shown. When you're looking here at the monthly chart, this is taking into consideration all available data for MCD. So if you're looking at something like, just anything like an IPO, this data is not going to be as useful. But then when you think about something like McDonald's, which has been publicly traded for quite some time, the seasonality begins to carry more weight. So you can see that in November, 83% of the time, we're going to have a bullish move, or we're going to have a monthly bar that closes higher than it opened. The average gain during that month is a 3% advance. I'm taking that seasonal data and I'm adding it to this monthly squeeze. So this type of information you may have to sit on for a full month, right? We're almost to the end of September. We'll get through October, and then when you start kicking up that November trading, I think you look for McDonald's to outperform. One other name that fits the exact same criteria is UPS. Now, UPS is currently on my trigger list, or something that I have alerts set for, because if I can get a move down into 154.63, that is where I would like to consider entering this. Now, it doesn't mean that that's going to be perfect, but that would be a double bottom against this low, and so far that low has been holding very well. I also like the idea that if we're using symmetry, we are thinking about this swing high to this swing low, and if a movement like that were to happen again, that would bring us down into 155.79. You want to try to catch moves like that on a day when it looks a little bit scary, when a lot of people that aren't thinking in these terms may be getting flushed out, right? Because you'll be trading below previous day's lows. It will not look good in the moment where it's trading down into these prices, but think about how it didn't look good when it was trading down here the first time. Yet, that's where it marked the low and then had that advance into 167. So if the same thing were to occur, I think you consider coming in and buying 155.79. So that's UPS, FSLY, Datadog. If you guys continue to follow these daily squeezes, I've got a list of them. And you don't want to, I don't think you want to be in every single one of them, but you keep them on your watch list, you kind of thumb through them, and then find the ones that, best fit your personality. You'll notice that Datadog is in its first week of a compression squeeze right here on this time frame. So may need a little bit more marking sideways, maybe something that trades through this range, a little bit of back and forth, but in time, and I think that it'll be maybe something like 2 to 3 weeks, what you are looking for is right here. Do you see how this is your daily squeeze that is setting up in this lower subgraph? And then do you see the movement that provides in the stock? This signal is not anything magic. It's not anything necessary. It is proprietary. It's built into Thinkorswim off of the licensing. But what I'm trying to say is that it's not some crazy technique that, nobody is privileged to. It's a very basic way of saying this traded in a range. It had, a price that was basically agreed upon, and that will trade that way until you break out. So it's just looking at compression and sideways moments in time, and then thinking that that sideways nature isn't going to last forever, right? The markets don't move because they want to, they move because they have to. And as funds start, coming into this, that gives you the range expansion, and now it's just the same thing, right? Because that's one perspective to say, well, it's just trading sideways here through 85. I agree, and it will continue to do that until the moment that it is repriced. And then from there, you could either use a range comparison, you could use symmetry, right? If we're thinking about this old range, you would think, well, there was the low and there was the high, give or take. And that's about the range that we've been trading through. If it can start to break out, I will right-click that, create a duplicate drawing, and then just move it to where it broke out from. And then that's a way of thinking that says, after it gets out of this range, then we should spend time in the 92 up into 110 area. So that is another name that I'm going to be watching for the chance of purchasing. Let's do Amazon and Apple, and then we'll see if you guys have any questions. Amazon getting a nice bounce from the lows that we saw back here in July. So, right there at about 28, actually 28.88 is what you saw the bounce up off of today. I think that Amazon is going to give you an opportunity to buy it at 2,700. Now, a lot can happen between now and the end of the month, but what I'm thinking is that tomorrow should provide a bounce. Maybe that bounce continues into Wednesday, but as you continue to approach the declining 21 EMA, that should provide resistance somewhere in that area. And then if this can roll over, I like the way that that extension perfectly coincides with that tree line, and I just think that 2,700, if it were to make a shove down into there, would finally be an area where the product is truly oversold, and then we could be looking for it to head higher. So, I'm going to try to be patient over the course of the next 10 days and see if I can get a move down into that discounted area, and then I'm going to treat Apple exactly the same way. So you can see how throughout this entire bullish move, the 21 EMA just had a wonderful slant to it, right? Basically moving up throughout this entire period. Well, now this 21 EMA actually has more of a downward projection to it. So as price rallies into that, bearish moving average, look for resistance in there. And then what I'm trying to see, and what will really be important to gauge the rest of the market, because Apple is such an important, vital component of this anymore, is how do we act at the gap fill? So that level is 96.30, and I'm just thinking, if you come down to 100, you're going to have a lot of people that are very eager to buy 100. Flush them out, get all of that just, completely taken out, get down into something like 96, maybe a touch below, and then that's where we should be able to form more of a meaningful base and see if tech can head higher from there. So that's a couple, big name picks, Apple and Amazon. We'll see how those act in relationship to the broad, kind of the key markets. Then you've got a few off the beaten path like Peloton, and I don't think I spoke to Pinterest just yet. I cover this so often in every one of our daily sessions, I don't want to sound repetitive, but this is and continues to be one of my favorite picks. So off of this type of information, this is one where the seasonality is not that important, right? Because Pinterest is a relatively new offering, and I can't just use last year's data and think that's a trend. So I can't really use that much. But I can look at this weekly chart. And even though this may look a little cramped, it does provide nice perspective. Where I'm looking back here noting the high off of the weekly chart, this was put in place in 2019. And do you see how when you make note of it off of your weekly chart and say, all right, that is 36.83, well then look at that level carried forward. Here's 36.83, and we're just chopping right through last year's high. I will defend this point of view as long as we stay above the double bottom at 32.51. So it's a wide margin of error, but I think there is so much to be learned from the idea of trade a little bit smaller than you can. John tells the story so much about one of his mentors that would say, most people fail because they're trading too big and they place their stops too tight. So I try to take the opposing point of view and say, I'm going to trade a little bit smaller than I have to, and I'm going to widen out that stop. That way, if it gets a little volatile, I can tolerate it, and then ideally, over the course of the next 3 to 4 weeks, I am involved on the move into 41, and then I think in time you get 45. So if that's not on your watch list, I do think you would do well to add it. Sabrina says, I've been following for 3 months and I've made money on your suggestions. Well, thank you so much for the feedback. That is all I could ask for. So they won't all be winners, but if you will stick to the method over time and really study why it works and the setup behind it, it's a skill set that will serve you for the rest of your life. And then a question on Etsy. So I spent a lot of time reviewing Etsy. It comes up, I think probably because of that S&P inclusion. And a lot of traders have been curious about this name. Until today, I didn't really have much of a setup in it. Today, notice how you've just seen that first dot of a daily squeeze. So all that is telling me is that now it is compressed into a point where you've got this range going, and in the next couple of weeks, it will likely get out of it. I don't have great advice to give you on Etsy. I almost feel like there's too many people involved with it. Now, I don't know where you stand on this, of course, and I don't want to derail any trading plan that you may be putting into work. But it's not my cup of tea. I feel like it's maybe a little bit too much in focus for those reasons. Being below that 10-week is not really what I look for in my trend-based trades. So I don't mind looking at it for you, but I just don't think I've got anything that I'm going to really be able to lean on and tell you, hey, buy Etsy. I mean, I would much rather you focus on Roku, Zoom, any of those setups that we've discussed to this point. And then Crowd and Zoom, where do you think Zoom might top out? I will never give advice on something like that because it's like asking how long is a rope? I don't know. There's a lot of variables and it can be very open to interpretation. We had one person, not a suggested trade, but I just saw a guy in the chat that was kind of losing his mind over the Zoom earnings report. I think he had sold naked calls going into it. And I only tell you that story because, you think, like if you're asking where does this top out, maybe you feel like it's a bit extended, needs to revert, whatever your point of view may be. But really it's the emotion behind it and people like that are stuck. And I just feel like I've seen way more of these products that can get way further extended than people expect. So for me in my trading, I will not try to call the high. When it does finally hit, ideally I've taken everything off and have made good money to the upside, but I will not try to look at it for the big reversal. There's just too many people that are stuck, and as it keeps ripping them apart, it'll keep driving prices higher. Think about Tesla. Tesla was probably the short squeeze of the century, and so many people tried to be steadfast in the arguing of their opinion, and now they're left, trying to repair their accounts. So I hope that point of view makes sense, and then I'll do one last one here with CrowdStrike. What a beautiful close. Inside this pattern, and just in an effort to run charts the same way every single time, I do try to look at the retracement from the major 153 high and see where it pauses. Look at that. If you've never studied this, I think this gives you reason to do it. It is just a level on a chart, and in time, I expect it to be cleared. But do you see how that retracement is 138.64, and the high from today's session is 138.55? What's a dime among friends? So at least know that that's an area we could pause, okay? If you think that is resistance, where do you expect it to go bid? Like if it's rolling over or coming back from this resistance tomorrow, look for that rising 21 day to give you an area of support. So I do think that's a good product. Obviously $12 can be a lot for some traders, right? We're talking about currently at 138 and I'm trying to get you to buy 126. So that would be a very meaningful correction, but look for that moving average to keep working its way higher, chewing through these areas of resistance and eventually taking out the lifetime high. But this type of platform, right, the cloud, the tech side of it, I think very much has reason to be studied. And I think that these will continue to be good names in the future. I like the fundamental approach. I think the technicals are there too. And hopefully that helps you as you put together your charts and your trading plan. So I really appreciate you guys joining us on Facebook Live. If you enjoy this type of analysis, John and I are going to be doing some live trading this week. So I'm in the chat room. I'm in a couple different venues on the website. Obviously, I'd love to have you there, but if you want to spend something that is more dedicated and more of a class-based focus, we'll be getting this started tomorrow. You can learn more about it just at that URL there, simplertrading.com/aim. And I hope to see you guys there. So have a great rest of your evening, and I'll talk to you again soon.